All right. First, let me start off, and I want to hear from members, especially with everything that we looked at last night. I tried to put I put actually two notes out last night, so just everybody had their eyeballs on the right things going into today, and then we'll talk about where my opinion on what we're seeing right now. Again, not a prediction on how the market's going to play out, just what I think I'm seeing right now as far as positioning is concerned, and sentiment. Flow, forget about it. Flow was pretty bad even before earnings. Now, we have no edge whatsoever. But especially members, first of all, did you guys hop on for the ride today for this snapback sentiment gamma squeeze, whatever you want to call it? Did you guys catch anything in the morning? Cool. All right, good. Because today, I'll tell you, it was, we don't get as lucky as we did this morning. Okay. And what I mean by that is, if you guys remember yesterday, like in the afternoon, what I mentioned was whoever wants to be aggressive, okay, if you're looking to be aggressive here, if you've been in cash and you've been waiting for a yank, you just didn't want to take the risk of playing an overextended market, you didn't like what you were seeing, and you were in a cash position and you were looking to be aggressive off any sort of pull, okay? The way to front run both the short-term bullish sentiment signals and gamma signal would have been to buy something before the close yesterday, meaning, ES, SPY calls, a high beta name you think is going to squeeze, whatever it may be. TNA, IWM, because it's been hit the most. Exactly. So if you were interested in being aggressive, okay, maybe you weren't. I wasn't, okay. You would look to front run it by rolling the dice and getting your hands on something before the close yesterday, okay. If you wanted to take, I wouldn't say a more conservative route, but the by the book, okay, the by the book approach to playing off sentiment and that gamma signal would have been to not play anything yesterday, come in this morning, okay, and hope for a either flattish, even better would have been a weak market, okay. And the first signs of any sort of band of call sweeper activity. And the reason why that's significant is because, right, we talk about this all the time. Sweeper activity, the true edge out of its momentum. Okay, they can light the match. And if they can get the momentum going in the opposite direction, which would be to the upside, okay, you have some forces at play. You have sentiment on your side, and you have gamma at a level where if the ball starts rolling in the other direction, which would be to the upside, dealers have to buy the S&P 500 to hedge. And that snowballs into what we saw today. Okay. And the reason why today we got lucky in a sense is a lot of times they just gap it up huge and go. We saw that last night, futures. So if you didn't take the aggressive approach and buy something before the close yesterday, okay, by 8 o'clock Eastern time last night, you probably were starting to feel nauseous because the future started pushing to the upside, right, and started strengthening. And then all of a sudden, now you're going to sleep thinking, oh my God, I either got to decide to chase some of this green tomorrow or I missed it. Okay. But we were fortunate enough to not only the overnight session fading, but into the open, right? So we kind of got this. Okay. And, like I said, for me, Some of you are aware of this, not all of you, but for me, the way I like to play it, I don't just look to instantly buy this because I have sentiment and gamma on my side, okay, flashing buy signals. That's where I think sweeper activity can really help, okay, on an intraday basis. Because if we see put sweeper activity come in, right, if they're getting aggressive buying puts, okay, that's not going to help us as far as the momentum flipping to the upside and getting people to squeeze. That's going to create more downward pressure. Okay, so if I'm seeing aggressive put sweeper activity, I'm not just going to get in the middle of it and try to catch a falling knife. But once you start to see the tempo pick up on the call side, then it's worth a shot to find something, right? Again, whether it's the indices, a name you like, both, whatever it may be. Everybody has a different preference at a different time, right? Like this go around, a lot of us played TNA because IWM has been mangled, okay, and was the first to light up with bullish sentiment signals. But so everybody has a different preference, but get your hands on something. Now you have less risk on the table because you're not holding overnight just in case there's follow through on the downside, right? You're going to find a stop where the momentum's not going in the right direction and you admit you're wrong, all right? But if you are fortunate like we were today, where the sweeper activity started to pick up tempo, just continued throughout the day, this is what favorable sentiment with a splash of flat to negative gamma exposure will do. These things, they get crazier and crazier each and every time, okay? It doesn't always have to end up like this, but more than often they do. It used to be a couple days. Now it's done in one day. And the more and more machines and algos and program traders are involved in this game, the quicker it's going to get and the less it's going to last. I mean, it's just is what it is. All right. But this is exactly what the turnout is when those signals click. Okay. And even if you missed it completely, if you're new, right? A lot of newer people do miss it because they're not totally comfortable with it. They're not aware of what to look at and look for. Okay. Next go around exactly what to look for. Okay. You want to be aggressive, like I mentioned earlier. You don't mind being a little underwater, or you're looking to add if there is weakness that following morning. You try to get your hands on something the day before, right? Before the bell. Okay. You want to take a more conservative route and try to catch it intraday with less overnight risk. You do what we did today. Okay. The risk is that if this thing would have gapped up bigly, like we've seen in the past, right? If futures were up 45, if the S&P was up 45 handles before the market opened and you have nothing, no exposure, it's not that easy to just come in and chase that. All right. And like you saw today, a lot of the moves and names where it was more sporadic and random into the afternoon, right? Everything wasn't moving in sync with the market throughout the whole entire day. Everything moved right out of the gate when we started to squeeze. And then it got, a little more sporadic and spread out and random after that. All right. So that's a perfect segue to what I wanted to talk about next. Okay. I don't see what happened today doesn't really change anything that I've been mentioning or, we've been looking at together. Doesn't change a damn thing. This is, again, just another sentiment squeeze where players overdo it in a short amount of time. You get some bullish sentiment signals and you get this snapback rally. Okay. What happens in bull markets, these lead to new highs, right? We see that continuously. We saw it off here. We saw it off here, right? We saw it off here. We saw it off here. But as the rally continues and gets longer in the tooth without a correction, there are more risk. There's more overhead risk, as I like to call it. Okay. And what we got now is some overhead risk that the only way we get rid of it is through time. Okay. It doesn't even need to be a certain amount of selling or weakness or anything like that. I think it's time. So in other words, this goes back to new highs. We are right back to where we were right here, where we felt uneasy and really didn't want to own anything, right? Breath sucked, everything sucked. Okay. So what we want, the market doesn't give a rat's ass what we want, but what we want at the least this thing to chop around and do nothing and really start to frustrate and shake out some people. Okay. We'll go over the reasons why. Okay. Because at this point here, the market's it was running on fumes. Okay. You got a lot more people involved, right? Hedge funds. We'll talk about that in a second. Okay. They've been chasing because they have to chase some performance. Okay. And just the fact that almost every egg hatched, right? You had growth names, then you had SPAC names, then you had meme plays, then you had commodity plays, then you had reopening plays, then you had, there's nothing, crypto, exactly. There was nothing left, right? There's nothing left. Like everybody was hiding in the big tech names because they were so out of favor, right? They were being sold for months to play all the things I just mentioned, that people started to go back there for exposure. All right. The problem is there's not enough names there, right? So you get that shitty breadth, lack of participation, and it's just an unhealthy market. When they stop buying, when you have these FANG names like Apple and not just FANG, big tech, NVIDIA, all these names just shoot up out of a cannon. When they get overextended and the buying dries up, they're not buying anything else. What happens? This happens, right? You get a pull. So that's kind of where we were at. All right. So what I see on the positioning front is a lot more interesting to me, and how that plays out. Okay. And what I mean by that, and that's what we'll look over like we used to look at every Tuesday. The BOVA client fund flow came out again today, right? Every week it comes out. You get updates on how clients are positioning. And what's been going on is that you have this reflation reopening trade that players have been positioning into for a while, okay, for a long time, playing for the reopening of the economy, okay, also playing for higher interest rates, right, and everything that goes along with it, all right. It got well overcooked, okay. Basically, everybody was positioned for the same thing. The economy is going to start to reopen. Rates are going to push higher, grind higher at the least. And if there's any sort of inflation, rates can really get crazy to the upside. That's how the whole entire world was positioned, basically. Okay. And nobody wanted any growth exposure, because if that's your thesis, rates are going to go higher. The last thing you want to be long of is tech and growth. That's what you sell when rates move higher. Okay, especially if they start to accelerate to the upside. So everybody got out of growth. As most of you are well aware, that was an unbelievable theme in the market, right? The Kathy names, all that jazz, fun time, names exploding all over the place. They went dead. They basically crashed. All the money came out, went into a reopening trade, okay? That got long in the tooth, and now they got caught. Okay, why did they get caught? Forget about the Delta variant and all that. That's just some noise around it. But instead of the economy starting to reopen and rates at the least grind higher, a lot of people thought they would accelerate to the upside because of hot CPI, PPI inflationary gauges, okay, which did come to fruition, by the way. Okay, so they got high CPI numbers. The problem is rates did the total opposite. Okay, they kicked it into reverse, and not only did they stop going higher, they really came in, right? So the 10-year went down, I think it was a high of 1.8 to 116 or 115 was a low today. Okay, so now you have this over positioned reopening higher rates play theme that everyone has been positioning into that needs to be unwound, right? They need to unwind at least some of that positioning. They were so confident in that. Now that the total opposite's happening, right? You start to see that unwind, at least slowly, if not aggressively. And that's what we've been seeing. Okay? That's why anything travel related, the banks, cyclicals, these things have been slowly dying for weeks now, not just the last couple of days. Okay? They've been dead wood. And money, little by little, has been rotating into the growth in tech end. Okay? So what I have been watching here closely, I want to see how aggressive that rotation has, how it ends up materializing. Do they admit they're wrong and aggressively go into lower rate positions? In other words, all right, listen, I was betting on inflation. I'm wrong. We got to move our funds over to lower rate plays now. Let's get out of all the cyclicals and let's go into deflationary type stuff. Okay. Or are they stubborn and stick by their guns? And even in the face of lower rates, say, rates are going higher. I don't care what the markets are telling me. I know what I'm doing. Right? So those are the two scenarios that can happen. And different occasions, right? It's never always the same thing. One of the two happened. I'll give you an example. Growth, when growth started to correct, because everybody was in growth and nobody wanted cyclicals, when that started to rotate, you had stubborn bulls that didn't want to give up their growth names because they didn't believe that the rotation would be real, right? So instead of rotating, they bought more of the Fubos and the Rokus and the Teladocs, and they started buying them on dips. Okay, so those were stubborn bulls. They still believed in the growth theme and didn't capitulate and go into cyclicals. Okay, what ended up happening? There was more than another leg lower, right? Because I remember, and we were talking about it, this was the example, okay? Fubo is a popular Twitter social media name, okay? Social media traders love this name. And when this thing started to pull, instead of people giving up and rotating into banks or Caterpillar, okay, here, as it's pulling back, they thought this was a gift from the gods, right? We got to pull back. When this thing gets back on course, boom, new highs, and we'll count our money. So they ended up starting to buy the dip and they get caught, right? And this happens. And now, once you get to this point here, okay, there's not too many bulls left, right? Once you get eaten alive like that, it's only a matter of time before you get enough capitulation, all right? So that's where we're at right now, in my opinion, with the reopening theme, okay? Just like growth back then. Everybody piled in, okay? And what I'm seeing following week in, week out on, the positioning stuff, we're seeing the same thing. Stubborn bulls in these reflationary cyclical plays. In simple English, they're not selling and buying growth. Okay? They're selling even more growth to buy more reopening cyclical inflationary plays. They are convinced the bond market is on crack, has no clue. They're smarter than the bond market. They're convinced no matter what the market, the price action, no matter what they see in front of them, they're right because rates are going higher no matter what anybody tells them. It has to. And that tells us, right, that the shakeout that we've seen, the pullback we've seen in some of these reopening plays, likely is not enough. Okay. Now we've reached the point, again, if you guys are members, you know exactly what I'm talking about. We reached a point just recently where a lot of these cyclical reopening reflationary sectors became oversold, both price action and trader sentiment, short-term sentiment, on the downside, right? In simple English, they were due for a bounce. Okay, they were overdue for a bounce. And they may stabilize here, as can rates, right? And find some sort of bottom here to bounce off of and maybe see a little bit of upside. All right, but the likelihood, well, not even the likelihood, if you were like myself and you wanted to see capitulation there, right? Like for me, here's why, guys. From my experience, all right, when things dip, the consensus out there doesn't want to buy more, and that ends up becoming a great dip buy. You understand? So in other words, when the market comes, when a market or a sector comes in and starts to sell, a lot of times what keeps that bull trend intact is the investor trader, their emotions think the run is over. So they're quick, they can't wait to get out because they think it's going to roll over and there's going to be further selling. All right. They're not eager to buy dips. The market, in other words, when everyone's eager to buy dips, the market doesn't dip. It doesn't give you those dips to buy. You guys know what I'm saying? So that's what we have now. We have a pullback across the board in these things, and everybody and their mother's uncle wants it. That's what we have. Okay. And now on the flip side, okay, we've seen how they can look price action wise, okay, because, could weigh on the markets, right? Especially the industrials, if there is further selling. But there is a glass half full somewhere in here. And that is that a lot of the growth stuff that everybody already got out of, right? A lot of the defensive growth stuff, the lower rate plays, I guess I should call them, players still don't have much exposure there. And if they ever need or decide to need exposure in these groups, you got a lot of potential buying that can come in. You know what I'm saying? And, that's basically what I'm looking at this stuff for. I'm looking to see how much potential buying is on the sideline that can come in. Because we've just seen, right, just a glimpse of what happens in the price action when players get caught offside and need to move in the other direction. We just saw it in the NASDAQ. Nobody had any NASDAQ exposure. That's how aggressively offside they were to playing higher rates. They wanted nothing to do with the NASDAQ. And to this day, right, even to today, the NASDAQ outperformance has been incredible. You know, here, and even worse, in my opinion, here. This was the height of the inflation fear. Right into that niner. Don't own tech. Whatever you do, make sure you don't own any tech stocks. You're dead. Right? That's basically what the noise was around us. And, you know, the move has been ridiculous. The move has been ridiculous. So, and look, here is, let's get to it. Ooh, what did I just do? Hold on. Somebody type something in the chat a second. I think I made a boo-boo here. Oh, I got it. Never mind. Thank you. I got it. I had it upside down somehow. Don't ask me how. All right. So let's get to, let me get to this here. So where is the line I want you guys to see? Well, here's one of the lines. Client sold 8 of 11 sector ETFs led by growth-oriented consumer discretionary, tech, and healthcare. It was, oops, it's not easy to navigate this shit. Here, meanwhile, clients sold growth sectors, commercial services, healthcare, tech. Clients continue to sell commercial services at a record pace. 14th largest outflow on record. So this dip, this pullback in the cyclicals, not dip, they've been pulling back. There's been some harsh pullbacks out there in some of these things, okay? Rather than clients being shaken out or even moving some money over the other direction, the total opposite they're doing. They're adding. Okay, they're adding. And honestly, you probably, this go around, you don't even, like if you just opened your ears, you wouldn't even need to look at this to acknowledge, like everybody is talking about doing it. Kalanovich is one of them. Tom Lee is another one. Everybody and their mother's grandfather's uncle. Everybody. So, and I get it. You know, I'm a Kalanovich guy, right? I'm a big fan. But they all have to be right. And there's going to be two people wrong. The market and Cathie Wood. Those are the only two in the whole effing world. Okay? Everybody. Hedge funds, gobbling up these things. Cyclicals, financials, energy, right? So cyclical financials, energy, reflationary. So the largest inflows, biggest outflows from growth-oriented sectors. Here they are, right here. Where's the one I wanted to show you? I don't know where it is, but this is an ETF. This is ETF. Oh, yeah, here. ETF buying and cyclicals, selling in growth sectors. So not just individual names, ETFs. Growth. All right. So what's that mean, right? What's that mean? Like a lot of people think growth and they think, companies with zero revenue trading on the NASDAQ. No, there are studs on the growth side, right? We've been talking about those names for quite a bit now, since the rotation started. Right? The Twilios, the Rokus, Bill, right? All these names. Crowd, ZS. All right. The issue with these things, right, is, and this is again what we've been talking about with members. This happened, right? So this was the spot where a lot of you played these names. Like this was the spot, the initial spot to start looking at these things before some of that rotation started to happen. Okay? Because this is what happens. This is what happens. We got a glimpse of when they start to move some money, what it's going to look like. Right? The travel names, the economically sensitive names, they look the opposite of this. Okay, so that was the problem. We got here now a little bit of consolidation breather, right? And then the other issue, we're going to have earnings coming up. So that's the problem. Okay, that's the problem. One way we can combat that, right, is something we discussed. When these things pull back, like when you get the down markets and these things sell, these are the things, with the information we have at hand now, these are the things we want to look to buy. Okay, but the risk is that these things can hang here a bit, and then you have earnings. That's the problem here. You know what I mean? That's the risk. So, right. I mean, all right, we could hang out here if they chop around, but then you could end up, you have to hold through earnings. And, obviously that's an added risk. So, Roy, you know what we're hoping for? You know what solves all our problems? The market pulls back or does nothing. Everything just foxes around until we get through some earnings season. Maybe, God forbid, we even get a pullback in the market. And then, you know what I mean? Things probably be even better set up. We got our pullback. You're right. I can't even. You might be right. You might be right. We already got our pullback. Oh, God. But, guys, listen. No matter what, this is something else we spoke about. When you have a market, right, that looks like this, okay? When you have a market that looks like this, it's not going to be easy. It's not going to be easy. You know, we need a reset. That's the only thing that will loosen things up for us. We need a legitimate reset. This is not a reset. This resets things maybe for a couple of days. That's great. Okay. But we need a legitimate reset. At the least, something like this. Where's my pen? Oh. At least something like this. At least. You know, some time involved. We need at least. Otherwise, this is what we got to deal with. You know, we got to look at rotation. We got to look at sectors. It's a real pain in the ass. But it is what it is. You can't just, like, look, even if you thought the market goes higher from here, you better, if you're not playing the actual S&P 500, you better damn well know what stocks are going up with this. You can't just buy anything. You know what I mean? You just can't buy anything. And look what we have now. Like, yeah, the Dow gets killed. Look at the small caps. Look at this. Look at this, right? So the S&P 500 is breaking new highs. Market feels bullish. And this thing is going in the complete opposite direction. Right? Or the industrials, or whatever sector you want to look at. Participation's awful. Awful. So, you know, but this is, again, I don't tell anybody what to do, right? I can tell you guys what I do, but what I like to do is tell you what I see. And that's what I see right now on the positioning side of things. Okay. And it's a difficult spot. You know, plus heading into earnings season. So my recommendation, okay, if you don't need to take the needle here, my recommendation is to look for these washes like we get and play for these squeezes on the indices. Okay, but the problem is I wouldn't hold a bet on the indices because I think there's risk, you know, and here's one of the risks. Watch. If things go right, it could set up for a really nice second half in growth, you know, it really could, but this market doesn't give a rat's ass about us. Look, okay, so here's the issue, another issue we got. It's all fine and dandy when hedge funds are buying, okay? They'll push markets up, they move a lot of money. But if some reason comes up that they need to unwind and start selling, you got problems. Okay? Doesn't mean that market has to crash, but you got a lot of supply. Market won't be going higher if they're selling all this. You know? So if this Delta variant, or for whatever reason, rates are plummeting, if there is an actual excuse or a reason out there, and we hear about it, and these guys are caught this long, there are going to be problems. Okay? Like, look at this. I told you guys, like, a lot of what we're seeing reminds me, not seeing, feeling, reminds me of like 2018. Okay? This. And what happened was hedge funds bought this dip. Okay? Thought they were smart, and they got caught, had to sell, and you guys remember what this felt like. You know what I mean? So I'm not here. I'm not trying to scare anyone. You guys know I don't do that. It doesn't have to be this. It doesn't have to be COVID. Okay. It could be this. Look, you know what I mean? It could be chop, little pullbacks. But when they're selling, it's not easy for a market to push higher. You better have a damn big buyer buying it from them. But they're buying, man, right? We've been looking at this thing for a long time. We had this thing in our back pocket for this whole rally. Hedge funds didn't believe. Every time they started to believe, they got spooked out. Believe, spooked out. Believe, spooked out. This time, they believe. It really is. It really is. It really is, Speed. It really is. It's almost frightening. But, you know, there's a legitimate argument out there. Go listen to Kathy Wood. She's been harping on this for a while. You know, you can get rates creeping higher, but you're not going to get inflation because of technology and a few other things. You know what I mean? Now, again, I don't know. I'm not smart enough to know. But she's a rare bird right now. And that's not always the case. I mean, coming out of 2008, everybody swore we were going to see hyperinflation. Worse then than now. Worse. They practically guaranteed we were going to turn into the Weimar Republic. That's how bad the noise was. It scared the shit out of everybody. Everybody who ended up finally getting long in 2009 scared the shit out of everybody. And we haven't had inflation since, guys, you know? And who knows? That's not my job. I'm not even going to pretend to try to figure that stuff out. You know? I think the easier job for us to figure out is how are players positioned. You know? Because even if they're right, but everybody's already positioned for it, you don't get rewarded. Yeah, they're greater forces, Dan. Exactly. That's why I don't pay to rack our brain, you know? It's good to have an idea of what the hell's going on out there, right? So you know what the hell you're looking at. But as far as a bias, it doesn't. Exactly. Exactly. You know? So the bottom line, all right, we still have overhead risk, which makes position trading, swing trading positions difficult. Okay, still makes it really difficult. And forget about like the breadth and all that. You know, it's just not worth swing trading right now. It's not. It's not. What will have trip? Everything else I just spoke about. Half the market. Trip is not the only stock. Look at anything tied to travel or reopening the economy. It looks like Trip, probably worse. You know, I saw this thing. I can't believe what this thing ended up. MSG. This was their favorite play, reopening play. I can't believe this. I didn't even look at this thing in a couple months. Look at this thing. I can't believe where this thing is right now again. Right back to where it started. This. So you're talking about Trip? There's 3,000 trips. Anything tied to reopening the economy looks like Trip. So for Trip to start moving higher, you're going to need reopening plays to start acting better. Rates going higher. MGNI is more of growth spec and underbelly type play. You know, so this I think could do well if you get growth hot. You know, right now they're sticking to the studs of, you know what I mean? Like the stud names of growth. That's where all the speculative juice out of this market got sucked out. Okay, so the more speculative the name, the harder it's going to be. You understand? Bitcoin, SPACs, $2 stocks, any spec, risk appetite for spec. Remember we were talking about how crazy it was at one time? Has been totally sucked out of the market. Oh yeah, MLCO, the casino, right? China and reopening. You got a double whammy there. That's the thing, Ryan, I think nobody's talking about too. China. Everybody thinks it's like the Delta variant. This China situation is becoming a problem. And could be an even bigger reason why some of these cyclicals aren't acting right. But anyway, right now the growth stuff they're going to are the big guys, you know, from the NVIDIAs of the world to Twilio, Vive. You guys know their name, Vive? Now, NOW, Net. Yep. Bill. You know, all these names. Doku, good call. But leave it. Dr. Fauci. How about this one? Peloton. Well, this is kind of COVID too, right? I don't know if it's you know, some of the other ones are moving like snow, right? But you're going down the spec ladder there, right? Because they're trading at such a high multiple, they're losing money. Hubs, I haven't looked at that Hubs in a while. Oh, wow. Coop, I think Coop has not been doing well. Coop, let me see Coop. Yeah, Coop hasn't been doing well. What happened to Coop? Must be earnings or something. Coop used to always work with the software names. DT, good call. Huh, look at it. You know what I mean? Path could be, Mike. Path could be. You know? Again, I don't know too much about the company, though. But it's been catching sweeper activity. So I would pay attention to it. But you can see it in the price action, guys, what they've been buying. You know, it's pretty evident. S, yes, that's a cybersecurity name, right? Definitely. Caught some action yesterday. And we haven't even talked about those names, right? ZS, Crowd. I mean, these things are monsters. Is that one too? I never looked at that one. PNW. Oh, wow. Live Person, that's a smaller name, right? Looks good, though. Wow. So, you know, I think to see some of the underbelly names of these, right? So they go down a little more to buy some of the more speculative names. You need that rotation to start happening, you know? Once they start plowing money into growth names, then you'll see all of those MGNI hatch. You know, honestly, I thought we were going to see that right after the Rokus and all those exploded. But everything like hit the brakes. Everything hit the brakes. You know, so, but the participation, have you seen, like today we had solid breath numbers. Have you looked at these breath readings over the past week? What a menagerie. Yeah, they're looking. That's a good point, Moshe. That quality, right? So they're looking for quality, I guess, whatever that means. Back in 99, 2000, I saw quality names go to negative quality. But you're right. They're looking for quality. He's right. So we need, you need that aggressive risk appetite to come back in, and they'll start buying these things up. Like I still think this name is going to be a winner. It's a matter of time, right? It's a matter of time. Yeah, the quality names have held up on the growth end. I mean, what's quality on the cyclical end? They haven't done well. Well, they actually have done better, right? Caterpillar, let's see. No, I mean, look at that. They got beat up. So look what we saw today, guys. We saw a bounce in these things, right? The S&P, like yesterday, never happened. The NASDAQ up for the week. And look at these names. Caterpillar. So you got the NASDAQ and the S&P 500 basically right back to new highs. And look at this. Yeah, this is a nice dip with a market and without a pullback in the market. So this is what's been going on. Right? Trip looks like this. Or I mean, you want to look at even some of the more speculative travel names? Look, all of them. Look at this. I mean, you talk about oversold. Look at this. Yeah, mRNA is nuts. Dr. Fauci. These guys are counting their money. Dr. Fauci and Dr. Gottlieb have positions in this name. They print their own money, these guys. They print their own effing money. How do you short it? How? You talk about short, like try to catch the big one, or tactically? You talk about for a trade? I don't know if you could short. I mean, you need COVID to disappear. You can't do it. Oh, you're talking about just for a trade. Yeah. She is overextended, but it's dangerous, It's dangerous. Look at Asia. This, like, even if the Delta variant here means nothing in a sense, just a pause, in Asia, that's a total different animal there. And that's another thing that could possibly be weighing on the market, especially the cyclical end. Doesn't matter what's going on here. Fine, we're okay. But these companies cyclicals have global exposure. China's in bad shape. Nobody's really talking about that right now. Like, everybody's blind to it. China is in bad shape. First of all, they didn't do what the Fed did and throw in the kitchen sink. They've been tightening there. And now you have COVID across Asia going nuts. And the Chinese government shutting down companies. And Biden administration keeping the tariffs on them. Right? That was the big boost to China. Biden, that administration, is going to take the tariffs off. We're going to be back to the way we were. Meanwhile, they're keeping the tariffs on. So that's why China looks like this. Moshe, the key, and that's the problem when you get into an environment like we're in right now. Okay, and that's why I made the comment. I don't know if you caught it, but it's more important. Forget what they're buying. You just want to know that they're buying. You understand? Forget what the call buying is showing up in, as long as they're buying calls. Because you're just looking for momentum. That's all you're looking for. But what I recommend you do, Moshe, is instead of the flow, you go back and read last night the 2 notes I put out. I put out 2 notes as a prep for today. So you just want to, I made a couple comments. I don't know, you could dig them up. They're somewhere on here. But you just want to see a pace behind the call activity. You understand? You want to see them buying calls to create momentum. That's what's going to light the match. Doesn't matter, if you like the names they're buying, it's irrelevant. Because you're looking to play for a sentiment squeeze, a gamma squeeze. You're not looking to place a bet on a particular name. You're looking to catch the squeeze. When you see a bet on a name, there could be a bet on the name. Doesn't mean they're betting on that name right now to move. So you're just looking for call buying to create momentum. Hold on, let me see if I can dig it up while I'm talking here. Here we go. Okay. So that, forgive me for my spelling. Obviously, I got a lot going on, including spilled coffee. But I wouldn't put too much emphasis on into what they're sweeping, because everything has earnings, like I just mentioned. Pay attention to if they're sweeping calls. If you see call buying coming in, that's the likelihood is it's going to create momentum. Momentum is going to create upside. Upside is going to get dealers to buy more S&P 500 because they need gamma exposure. Get shorts to cover, right? It all snowballs. Oh, yeah. Well, again, it's a preference thing. It's a preference thing. You know what I mean? Because you can play a name, and there's a possibility the name that you play doesn't squeeze as much as the market, or at all in this environment. So basically, you want to play something that you feel strongly about that you're going to catch a squeeze in. That's basically what you're looking to do. So if you thought it was Apple today, the Apple squeeze today, right? I don't even know. But anyway, if you thought it was Apple, and you see some sweeper activity there, you buy some Apple. But you want to be safe. You may not see the upside you see in a name, right? There's more upside in names. You play the index, whether it's ETF, leverage ETF, futures. A lot of people play ES, that sort of thing. And Moshe, again, don't worry. This is one trade, right? That's what everybody gets hung up on. Even if you paper traded this, you want to develop a knack for it so you have a plan for the next time. You have an idea for the next time. Trust me, I've been doing this for a long time. I miss plenty of these because I wait the next day to be on the safe side and try to catch it intraday, and there's a huge gap up, and I have to spit on the rally. I didn't catch this whole move, by the way, today. As soon as sentiment got back to neutral, I raised stops and I ended up getting out. I don't know about you guys. As soon as intraday sentiment got back to neutral, which was what? Noon? Maybe a little later. So the afternoon, I didn't catch any of that move. Yeah, so what are you going to do, Dylan, it's all how, what your risk is, what your temperament is at that occasion, right? If you really want to be aggressive, you stay loose and just keep raising a stop. And if you're lucky enough to catch most of the move and you get stopped out here, right? You need some luck. But a lot of times, talk to people who've been around, they end up like this. When you have sentiment and gamma line up, it's a powerful thing. Yeah, I like to play TQQQ and TNA. UPRO, I played it. I'm not a big fan of it. Why? Have you played UPRO, Roy? Oh, wait, that's not the right UPRO. 3 times, I know. I just didn't like the way it could have been just that day I played it. But I have played it. But I like TNA and TQQQ. SPXL, that's another one, right? SPXL. That's another triple, right? Right, you got on the Dow. So, but today you could have played either of them. TQQQ has been a monster, especially with this rotation, But Moshe, don't get crazy about it, right? You learn a little bit each and every time to get more comfortable with it. And then there's less thinking involved. You know what I mean? Because right now, this market, these days, you don't have much time to think. That's for sure. You start thinking and things are gone. So, and this is how the rotation thing looks like over a month, over the past month. No, this is not updated. Wait a second. Here it is. All right, so this is over a month, shorter term. Tech, big tech got overextended, some buying there, and they came out of energy. Energy actually, on a short-term basis, had was best set up sentiment-wise. See, like the banks and materials here? Oh, banks and materials. You want to see these things, get over here like that. That's where tech was, if you remember. And now tech is over here. Big tech. Fang. This looks interesting too. They've been staples. Who the hell wants to buy those, right? This is the one you probably, the go-to there. PG. But that needs to cool off now. Look at this move. Industrials. Let's see. I didn't really see industrials. Let me see. Where's industrials on here? I thought industrials were on here too, weren't they? Oh, maybe they're on the ETF one. Let's see. Industrials. Here they are. They bought a little industrials. Yeah, PG caught a nice sweep, right, Alex? How long ago was that? I can't even keep track of time. I remember PG caught a nice sweep. 3 months. Was that down here or down here? Later, Hyper. Might have been down here, right? March. Yeah. Damn. All right, guys. So we're going into earnings season here, right? We're not earnings players. So you kind of want to, I'm sticking with intraday stuff. That's what I'm sticking with. It hasn't been that great intraday, especially in names. Um, yeah, like, if they come in, even if a name has earnings, if they come in and bomb a name, I'm going to look to get in the middle of it. Yeah, energy for trade, energy, some of these energy names look good, but the problem is you don't want to overstay. I don't think it's done yet. I think here they were oversold and they need to bounce, but there's still a lot of bulls. There's a lot of longer term bulls. And plus, you got earnings in a lot of these names. Energy. Karen, Like what energy name do you like? CVE, that's a nice name too. They report this month, end of the month. So now, let's say, right, based off everything we've been seeing, if you like CVE here, right, it's oversold enough for a trade to the end of the month before earnings. Otherwise it turns into an earnings play. I mean, you want to play CVE for earnings? I don't know if the risk reward is worth it. Or an ETF. You want to play it here for a bounce. Because again, they don't have to, I'm not saying they're going to get killed. They may just need to chop around some more. But I see what you guys, this is definitely, a little overdone to the downside. And bet back in April on VIX 25 calls for July 21st, pretty much worthless now. Which one? $6 million bet on VIX? I don't remember that, Alex. But I don't really pay attention to VIX too much. They closed it yesterday? You know what else was a good sign that we were going to get a squeeze today at some point? Moshe, this is another thing to keep an eye on. Yep, exactly. That was the most bullish thing all day yesterday. Where the hell is it? Oh. That's not it. Oh, this is it, right? No, that's not it. Hold on. Right here. So this is another good sign when you see this, especially coming in late. Nice size. Even better if you see quite a few of them. If you see quite a few of them come in rather than just one order, you're probably better playing for the squeeze right there and then. But one order, you know what I mean? Just make sure you're aware of it. But if they come in aggressive with VXX puts, they can really get things rolling. But yeah, see, you were aware of it. So you're doing okay, Moshe. Don't beat yourself up. This market's not going anywhere, It'll be around. DIA puts yesterday. What scares me more is when they come into before the selling, Mike. But you know, who knows? I mean, you know what I mean? Was it dated? I don't remember it. What strike was it? July 30th. Well, the stuff that sticks to me, Mike, like the stuff I always remember, like is the call buying that comes into flat or selling, right? Into green, I never get excited. You know, because it could be forced buying. And the same thing with like puts, you know, DIA puts could be just somebody who needed to protect. You like to see against the trend aggressive action, and you want to take notice of that. July 30th, 3:35 puts. 5, 5, 6. What was that? 1 o'clock, 2 o'clock? Yeah, well, wouldn't surprise me. He ends up cashing the ticket there either. Yeah, exactly, Dan. Or flat, you know? Yep, exactly. All right, I'm going to wrap it up too. Exactly. Yeah, hit the nail on the head. Basically, we want to stick with intraday, you know, try to look for these type of setups like we got, you know, late yesterday into today. You want to be aggressive, try to front run it a bit. If not, you want to play conservative here, just like you played out today, you know, and we stay patient. It's earnings season anyway. It's a good time to be selective and patient here. All right. Yep. Always a pleasure, guys. Good to be back on the Tuesday. I'll see the majority of you mañana. Have a good night.